It's March 26th, 2020, and we're in the midst of this virus entangling, trapping, I don't know, infiltrating everybody in the entire world in the middle of the pandemic and its exponential rise. And now I'm trying to navigate the markets here on my phone. So I'm going to show you the account, and after that, I want to talk about what I think is coming up next as it relates to my deleveraging process that I've been trying to do into this quote unquote bull trap. Whether or not it's a bull trap or not, um, it's up for debate, and I'm curious to hear what you guys say about it. There was some few comments, and some of you are saying that it isn't a bull trap, that we've seen the bottoms, and a lot of you are saying that it is a bull trap, and you agree with me. And I brought up a chart a couple episodes ago of what a bubble looks like and all the different stages of bubbles, and how we've just been through the denial phase, and we haven't really experienced a real big crash yet, even though we've been down like 35% on most of the market indexes. So first of all, I'm going to be updating you on the account. So here we go. I'm sitting at 61,791, which is about $4,000 more than I was yesterday. I made a video yesterday and on Monday, so I've been making a lot of episodes this week because I got nothing to do. You know, I'm not at work. I'm getting paid $0 right now, so the only money that I'm seeing is the ones that I'm looking at on my phone. Okay, so this is the account here. This is the day's performance, week performance. It's really from Monday here on. It's 6,000 plus 7,000, so about $14,000 since the weekend, and that's the value of the bull trap so far. All right. So if you want to see it on the SPY, it looks like this. All right. This is how big. This is a 3-month chart, and this bull trap is very, very small right here, but it could set us up for, it could set us up for a little bit of a bigger bounce. Who knows? Tomorrow, what I'm expecting that will happen. Well, let's just first go into the account. All right. So here are my options. Don't look at the option on the top. All right, it's a bit embarrassing. Don't do that. So I've sold the call against the Norwegian cruise liners just to collect some premium. The market was stabilizing a little bit, so I started to sell some options as well, not just buy options. I made an episode just not too long ago about how I'm switching to buying options, because if I think the volatility is higher than the implied volatility, then I'll buy. But if it's lower than the implied volatility, then I'll start selling options, which is kind of what I've done with Norwegian cruise lines at the moment. Or when I just see an opportunity, like for example, I sold an option on SBRA here. It's a healthcare REIT. And worst case scenario, worst case scenario, it drops all the way, down and never recovers. But I've sold an option, I've sold a call against it. So if it does reach its my entry price, I'll just break even and collect some premium. So I'm not really worried about that. So I'm just gonna let it pay off dividends if it does in the meantime. And if it stays below my entry price, it's fine. I'll just keep holding it, maybe sell another option at a higher price. Or if it triggers the call, then fine, I get to sell it for a little bit of profit through premium. Okay, so why does it do that? Strange. Okay, anyways, moving on. These are my other options here. I still have the SLV calls. Obviously a little bit down today. The market was, silver market wasn't popping today, but could be temporary. They're out until June 30th. I have 9 calls out till June 30th and a couple out to January 15th. So, and these are up quite a bit here. So they're up 79%, even though I had a down day today. On these two options, they're up still because they're like, what are they? $13 calls for SLV. Managed to scoop those up. That's real cheap. Anyway, moving on, the Apple call here. I have that. It's still down, but up today about $200. Apple overall, I had a big gain in Apple, over $1,000 today. It went up with the rest of the market, although I'm a little bit upset because even though I went up $4,000, it's still a tiny bit less in percentage wise than the S&P 500. And I always try to beat the S&P 500. That's my goal, on the downside or on the upside. And I haven't been doing that most days, so that's kind of a bad omen. It means that I should be definitely doing better in some ways. So I need to take that criticism from the real world into an account, right? The market's telling me I'm doing something wrong. So here I go. This is the rest. So you can see the $1,000 here on Apple, and moving down a list. My biggest steal, okay, the biggest purchase that I'm most proud of is Realty Income over here. I managed to snatch quite a bit of it, and you can see I'm almost averaged down to about even entry price. I'm only down 2%, and I now have $4,000, over $4,000 invested into this. This is a very good company that holds real estate. They rent out their properties, I believe, to things like 7-Eleven and Walgreens and all these stores. They're actually, most of them are open right now. So I think it's good. It used to pay a measly dividend compared to companies in the same industry, but now that the valuation has dropped, the dividend in comparison is very high. So at this entry price, 5.52% dividend is really, really good annually for this company. It's an outstanding company, and I'm really proud of this deal. It's very. I averaged down over here in the 40s, and now it just felt so good. So it's been up, like, I don't know, 16, 18%, something like more than that in this bull trap, because it was down 17 and now it's up 13, like, I don't know, close to 30%. Obviously, the percentages work differently on the way up and on the way down, but I'm just guesstimating here. So really proud of that. So moving on here, NYMT had a monster day, but if you just see how much money I lost in that, and I'm a bit kicking myself in the butt because I bought some Chimera a couple of days ago, and I sold it yesterday, and I missed out on a 46% move, so that's bad. But NYMT, even though it's a 48% move up, it's coming from an extremely depressed level, but it's still down over $2,000 on this. It's a New York mortgage trust, and basically, they hold a bunch of weird real estate related securities, and they pay off. I think they're a bit leveraged, but they probably have some leverage protection stuff, like against rising interest rates, against falling interest rates. They probably run a very, very complicated portfolio. So I think as the skeletons are coming out of some of these companies, they're starting to drop. But anyways, I have 860 shares in this right now, and if this does go back to normal levels, I'll have $4,000 in this as well. And the dividend, if you can believe it, at this point is 78%. So that's going down. Okay, 78%. Even if it goes down, even if they do a quarter of the dividend that they used to, it would still be worthwhile holding this investment if it does not decrease in principal and also doesn't set itself up for future losses. But I wish I knew more about this investment. I just know that, I know a little bit basics and it's popular, but I don't know exactly what they hold in their portfolio, and I don't know of a way to find out. If you do know of a way to find out, like, let me know. I tried browsing over websites, but I couldn't really find their exact holdings. So, but if you have like a good website for doing that, or if you found it at the source, let me know so I can do some more research. Maybe I need to get rid of it. But anyway, that was a monster move today. You can see the after hours another 19%, so a total of almost 60% there for New York Mortgage Trust. Moving on, Wheaton Precious Metals still managed to, actually went down after hours, but it managed to finish 2% higher, even though the metals were kind of taking a breather. Same thing with Newmont Mining. And moving on to the uranium sector, it had a modest gain. Cameco is trying to rebound off its lows as well, up 3.27%. Here's what the week looks like. This is the month. pretty low. Oh, let me show you here. Dropped down all the way down to 550. It's been pretty bad. You can see that almost 40% correction within this month. Royal Caribbean was looking pretty hot midday, up all the way to $49 or even more. Yeah, 49. But finished down a little bit. So I was up on this position at one point. Royal Caribbean, man, I would try to bottom fish and I tried to catch the falling knife, and I'm bleeding a little bit, but you can see how this company was worth like $130, $140 some point, dropped all the way down to 22. I was trying to catch a falling knife somewhere around here, and I almost caught it, but I still bled a little bit, and apparently I'm still bleeding 9%, so we'll see. Yeah, I don't think I had a call, not, but a company that I did sell a call for a profit was Southwest. So I still have some shares of Southwest, and I'm actually up $94 in this position. So I guess I caught that knife pretty well so far. And I also bought a call at the bottom as well, or near the bottom. So this is one of the exceptions where I haven't really bled from catching that knife. And look at this PE ratio, right? So this is the potential the company could have in good times if things are all good. So now I'm actually up in this position. I also sold the call for like $400 profit. So that's been good. $400 profit's fine. Okay, so moving on. By the way, let me know if reviewing the account on the phone is better than on the computer, on the monitor. I actually bought some SDAO as protection here, so so far I'm negative 10%, but that's okay. So I'm kind of expecting a sharp drop at the end of the day tomorrow, Friday. So hopefully I manage to deleverage a little bit more before that happens. I also deleveraged a bit more today, and I'll show you. That's what I want to talk about next. But I have to go to the computer for that, and you can see that the UK market here is losing by 5% of my position, but it's still pretty good entry price, 5% down, because if we just look back a few months here, you can see that it was all the way up at the $33, $34 level, and it dropped all the way down to 19, and now it's at 24, and I'm only down 5%. So if at some point this manages to regain its $34 status, I'm at 24 right now. It's a big gain, and this dividend will be huge, and this is buying a country, right? So a country with this kind of dividend is really good, right? It's like kind of buying a REIT. That's how much he was going to pay out. It's kind of crazy, but obviously that's going to be a lot less. I think some of that is due to petroleum, oil, whatever. So it's going to go down, but this just shows you the potential if the prices do go up, if the price of commodities does go up. All right, so now we're going to go into the computer. I want to show you on the monitor here what's going on. So this is my account, of course, and I want to go to the account tab here, and I want to show you this, that I now have, as opposed to yesterday, I now have $85,889 invested in the market. But how if my account is only worth $61,000? Well, leverage, right? I've taken out the Robinhood Gold option here. So currently, as you can see, I'm using $24,000 worth of leverage, which represents 28% of my total holdings. Now, I was explaining how I was planning to move this down to 25%. So you can see I'm sitting at 72-28 split right now. So hopefully tomorrow market moves up so much that I go down to 25%. Then I'm probably going to stay there for quite a while. I might not deleverage any further unless, we get another huge update on next week or something like that. But I'm going to stay at around 25 if I manage to get there. If tomorrow is a red day, then I'm just going to stay at 28 and sit there for a while. And this number is going to go down further than the market, which is okay, I guess. But I think I've deleveraged substantially enough to be able to survive the downturn. So that's the key point here. It's survival. All right. Um, if I can survive the downturn. So if this gets like halved, I'll have, if the market goes down another 50% from here, I'll have 44,000, and so I'll be a little bit underwater. So I can survive another 40, maybe 40% down on the market from here, which is a huge loss. I don't think it's going to happen no matter what happens. Even if like 10% of population of Earth dies, I don't think this market is going to drop by another 40% from here. Could be wrong. But if that does happen, those are going to be the least of my worries. Like I'm just going to ditch this account and just, worry about getting my hands on food and supplies to survive this incredibly difficult time, right? So that's least of my worries here. So I'm not betting that will happen. Okay. Now, if the market goes down quite substantially, so hopefully I deleverage more tomorrow. If not, that's fine. If the market goes down substantially on the next week and the next week after that, then I might actually increase my leverage instead of decrease, because I want to go even riskier and riskier as valuations come down. I mean, if a company looks good at a certain valuation, if the valuation becomes lower, it should, in theory, become more and more attractive, right? So therefore, you should, or I should, feel good about putting in more money. And so that's exactly what I plan on doing. By the way, 85,000, almost 86,000 is the highest number of worth of dollars in assets that I've ever owned in this account. So even though the market is down so much, you can see that my asset allocation is actually growing, right? It will contract faster than the market if things go bad, but as I leverage up again, and if things recover to this level once more, then I'll have even more. Okay, so this is the kind of leverage up as people deleverage type of strategy, right? So right now people might be levering up because they think, oh, the Dow is in a bull again, and it's gonna keep going down. But I'm actually doing the opposite, right? So and I'm gonna lever up as things get worse and worse. All right, and once eventually years from now, when things get back to quote unquote normal and times are good, I'm probably gonna be completely deleveraged and trying to take little advantages of market corrections, etc. All right, so that's the leverage strategy right here. It's it's a matter of survival, and yeah, we might be paying fees or whatever, but I'm trying to look at the big picture here, and this might be one of my biggest shots to make a big advance in the net worth of this account. So when there's blood in the streets, you gotta buy. So, and that's the message. All right, so if you managed to make it all the way to the end of the video, congratulations. I didn't know that I was so vocally appealing to listen to. I made like 3 videos this week, so it's a little more than my normal 2. Might make another one even tomorrow or the next day, depends on how things go. If tomorrow is really eventful, I will make another video to update you on the account as well to see how I'm doing. And let me know how you're doing. Like, I'm curious how my fellow investors out there are doing. So let me know. And if you manage to listen to the end of the video, today's word to let me know that you're one of those people and are interested, type in the comments the word survival. All right? Peace out.